When someone dies, beneficiaries usually worry about two different tax systems: estate tax and income tax. Estate tax is about the value transferred at death. Income tax is about what gets earned or distributed after death. On the EA exam, they love mixing these up. Your job is to separate what's taxed to the estate, what's taxed to the beneficiary, and what's not taxed at all. Start with the unlimited marital deduction. If property passes to a surviving spouse, it can be unlimited and tax-free for estate and gift tax purposes. But there are requirements. The recipient must be a legal spouse, must be a U.S. citizen, and generally must receive the property outright. If the spouse is not a U.S. citizen, the unlimited marital deduction is generally not allowed. Now the big trap. Marital deduction is not portability. Portability is the DSUE election, meaning the surviving spouse can use the deceased spouse's unused exclusion later, and portability is not automatic. To elect it, the executor must file Form 706 for the first spouse to die, even if no estate tax is due. Miss that filing, and the DSUE can be lost. Timing matters. Form 706 is due 9 months after death, with a 6-month extension available. On the exam, watch for a fact pattern where everything passes to the spouse, so no tax is owed, and the family skips the return. That's exactly when portability can still be worth real money, because the surviving spouse's estate might later exceed their own exclusion. For beneficiaries, most inheritances are not taxable income. If you inherit cash, you typically don't report it on your Form 1040. But there's a catch they like to test. If the estate actually owes estate tax and the beneficiary takes assets without the tax being handled, the beneficiary can end up on the hook. Also, inherited retirement accounts are different. Traditional IRA distributions are generally taxable when received. Basis is the other huge beneficiary topic. Inherited property usually gets a basis equal to fair market value on the date of death. That can be a step up or a step down. If the estate elects the alternate valuation date on Form 706, the valuation date is 6 months after death, but only if it lowers the estate value and the estate tax. And if an asset is distributed before the 6 months, its basis is the FMV on the distribution date. Here's the exam-friendly way to remember alternate valuation. It's not a free choice. It's an election tied to Form 706, and it must reduce both the gross estate value and the estate tax. Then apply the timing rule. Distributed before the 6-month mark means you use FMV on the distribution date, not the 6-month value. That timing detail is a classic EA exam twist. Marital has a traditional IRA, and she's also covered by a 401k at work. Because of that, she made several non-deductible contributions to her IRA over the years. How does Marital calculate the basis in her traditional IRA? The choices include no basis at all, adding contributions, adding distributions, or subtracting distributions. Think about it. The correct answer is the basis equals non-deductible contributions minus any distributions that already recovered basis. Basis is what you haven't gotten back tax-free yet. This is tracked on Form 8606. A tempting wrong answer is adding distributions of non-deductible contributions, but distributions reduce remaining basis because you've already recovered part of it. Natalie ran a bridal dressmaking shop using the cash method. When she died on January 1st, she was owed $20,000 for a dress. The vendor paid on March 1st, making the check to Natalie's estate during probate. The estate didn't distribute the $20,000 to her son Ethan before the estate was settled. Where is the $20,000 reported as taxable income? The correct answer is the estate's income tax return, Form 1041. This is income in respect of a decedent, or IRD, earned before death, received after death. It's not reported on Natalie's final Form 1040 because she didn't receive it while alive. And it's not on Ethan's return because the estate received it and didn't distribute it to him.